Okay. Okay, Barb, do you want to get
Yeah, I'll get
started on this?
started.
Yeah, thank you.
Well, welcome everyone to today's first Realtor Mastermind for 2022. We have Sandra Lasovic talking about our conditional offers hindering your business. For those of you that don't know Sandra, it sounds like there's a couple of you that already know Sandra really well, but for those of you that don't know her, she is a franchise owner and principal broker with the Mortgage Center Guelph, which services the Guelph and the surrounding area. Sandra's been doing mortgages for actually 20 years now. She has completed over 11,000.
I'm not that. Oh my God.
I was like, yikes. That is one busy lady. She has also been voted as one of the most influential women in the mortgage industry and has been asked to regularly guest lecture at the University of Guelph and Housing Program on mortgage financing. Sandra is a real estate investor herself, and I would say she's quite knowledgeable on both the lending side and the investing side of things. Sandra
Thanks,
is
Barb.
also, no problem. Sandra is also the top 3 mortgage broker and owners volume in Ontario at MCC. Today, let's talk a little bit about the format and the agenda for today's presentation. I'd like to introduce myself. I'm Barbara Cook, the Vice President of Franchise Development here at the Mortgage Center. I have years of experience in helping entrepreneurs and business owners with startups, scaling, redefining, and reinventing themselves. I am so excited to be here today to co-host the session on conditional offers hindering your business. So back to the format. It'll be about 10 to 15 minute presentation with examples and scenarios. At the end, we will open it up to 10 to 15 minutes for discussions and questions, and then we will wrap it up with next steps, and that will be to call Sandra's office, obviously. But let's get started, and over to you, Sandra.
Awesome. Thanks, Barb, for that great introduction. I know in the past, in the past, I've done these on my own, and I thought, oh, it might be great, and I'm hoping that these sessions become a little bit more interactive, because I think that's the benefit of something like this, is having a conversation. So I don't know about you, but I just had a conversation with a client last night, and their first-time home buyer, and they said, yeah, my real estate agent said that if you've got a conditional financing offer, an offer with a financing condition, forget it. The sellers aren't even going to look at it. And I see some of you, thank you guys for having your cameras on. Some of you are like nodding your heads going, yeah. So what I thought I could do today is just do a real quick recap for you and talk to you a little bit about some of the scenarios that we're looking at when helping your buyers put together purchase agreements without a financing condition. And really, it depends on the 5 C's of credit. Now, before I get into this, I have been getting more frequent calls from real buyers saying, hey, I put an offer in without a financing condition, because we know that most buyers require some type of financing. It's not a completely cash offer, right? Those are very rare and few and far between, but I am getting more and more calls where buyers are calling me and saying, hey, listen, I put together a cash offer, like no financing condition. That's how I would position that. And now it's 1 or 2 weeks before closing, and I can't close because the mortgage broker or the bank has told me that there's a problem and we're not going to be able to close. So they might be too embarrassed to even admit it. You might not even know as a realtor, right? Obviously, the first question I have is, did you talk to your real estate agent? Have you put them on notice? Because you have a sort of a fiduciary duty as well to let all the parties know that there's probably going to be an issue with financing, or we have to move the closing date. So when I sometimes call the realtor, because I'll call the real estate agent just out of courtesy to them. Obviously, if it's on the buyer side, I'm going to call the buyer's agent, right? And there sometimes I get the thing, oh, I had no idea, right? So you don't want to kind of be caught in that position because it's in not it's a difficult situation. It wrecks your reputation, right? If you're bringing in buyers that can't close. And you know, like most of you here, like my main market is Guelph and the surrounding area. So like Guelph and 25 kilometers out, I'm doing Kitchener, Waterloo, Cambridge, up to Woodstock. So just a little bit of background information on what I'm seeing in my office. So I also wanted just to kind of review with you what some of the issues are and what we're seeing in our office. And it all relates back to the 5 C's of credit. Okay. So, and I'll tell you, 70% of the issues that come up, and we've got credit history, that's pretty explanatory. Capital, lots of people don't necessarily have trouble coming up with a down payment. But these last 3 criteria, the capacity or the debt ratios, the character, which is the client's job stability, and then the collateral, the property. And as I said, I'm happy to share this with you guys. I would say 70% of the issues that arise with financing on why your clients can't put together offers, or the bank has told them, or another mortgage broker has told them that they need a financing condition, 70% of the issues around financing have to do with the last 3 criteria: the capacity, the debt ratios, character, which is related to job stability, and the collateral. Okay. And sometimes what I find, it's just, we can all blame COVID, and I totally get it, because I mean, I've had COVID go through my office and stuff like that. So I'm empathetic to it, but it doesn't forego doing a good job for your clients that are purchasing. So some of the things that I wanted to share with you are, as I said, I'm seeing in my office. So some of the questions that I get from buyer clients are, if I don't have cash, how can I put an offer on a property without a financing condition? Right? If I'm buying a $900,000 property and I don't have 900 grand to put as a down payment, right? How can I go in without a financing condition? Right? And there are very few people that can do that, even buyers from the GTA area. If they are selling their house for 2.5 million, and let's just say the closing dates don't match up on their purchase and sale, they need some kind of financing. They need a bridge loan. I do sometimes get those calls again a week before closing. Oh, I'm closing on my purchase, but my sale doesn't close for another month. And they have a firm offer on their purchase and sale. And I just realized that I need some kind of financing to buy. So remember, and people's also, the general public, financial literacy is at an all-time low. So we're kind of dealing with that at the same time. And then I've also, I do get a lot of referrals from real estate agents saying, hey, listen, these people went to their own bank or somebody else. Would you mind just having a second look at their application to see, because their bank is telling them they need a financing condition, no questions asked, right? But sometimes people don't need financing conditions. And what we end up doing at the office is just going through the risks. Make sure, Matt, there's somebody, okay, just make sure your stuff is muted. I mute just to be respectful to everybody. So back to this, sometimes the bank requires it, and the buyers are going, I can't buy a house with a financing condition. So I think we do a really excellent job at my office going through the risks of not putting together an offer with a financing condition, so that the buyers understand the risks and feel comfortable moving forward, right? So actually, I had a really excellent conversation with a first-time home buyer last night, and very nervous first-time home buyer. and he was going to be buying a townhouse for $651,000. And I don't know if any of you have seen the purview reports that I pull. I know Richard and Celia, you guys are very familiar with the purview reports. So he wanted to buy the property for $651,000. The top end of the purview report showed that it was worth about $590,000, right? And he was only able to put 10% down. And what we were able to do is figure out we ran the calculations. He was able to get a little bit of extra money from his family members, like his family members were a backup plan for him to allow him to put an offer on a property without a financing condition, even if the purview report or sort of the pseudo appraisal came in a little bit less. And that was really great. He felt comfortable about his decision. We'll see how the offer goes today. And then if the offer is accepted, obviously, he understands that if there is an appraisal that's required and if the appraisal comes in less, that they can, the financing will go through. And we've got a good backup plan. Just in light of time, because I want to open it up to discussion, Barb, what some of the things that we're doing in our office is, and some of the watch outs for you, is that people's income has really changed in the last couple of years because of CERB, right? And there are a lot of large employers in Guelph, for example, like Linamar. If you're working in Linamar in the factory, they do not guarantee 40 hours a week. They will not include that in their letter of employment. Right? So knowing that and then having that CERB income from the last 2 years, we've got to really work with the buyers to figure out, okay, what's the maximum pre-approval amount considering the variability in the income. Now, Oregon Tool, for example, just to be very specific for you guys, will guarantee Oregon Tool, which is the former Blount, they just changed their name in the last year. They will guarantee 40 hours work if you're working in the factory. So even if the client's been on CERB in the last couple of years and had a disruption in income, we can use their verifiable income with a job letter, even if it was less in the last 2 years. So just some interesting things to note. I did also want to warn you that if somebody does quit their job after they've put together an offer, the lender will call to confirm the customer's employment up to a week before closing. So it's always, we're in constant communication with our clients, so we know this and we let them know up front. And then the other sort of watch out is self-employed individuals who haven't done their taxes. So I'm actually just working with somebody right now, and she's a lawyer. They own a great house and they want to buy a rental property, but her husband is self-employed and hasn't done his income taxes for 2020, never mind 2021. So they're constantly missing the opportunities that are coming up, and the realtor is sitting in the sidelines going, oh no, like, come on guys, like there's these opportunities and that are coming up. And I've discussed private financing with them because a private mortgage would be a good option, but they don't want to go down that path. So again, these are some of the obstacles for clients who are putting together offers without financing conditions. So making sure that they talk to our office early in the process is really important. The other thing that I wanted to mention to you is that we actually have a really awesome mortgage app. And if you go to my website at skipthebank.ca, you can download that app, and clients can do a pre-approval for themselves. But there are risks to that. It just kind of gives people, because I have had clients and realtors say to me, oh, well, the client was pre-approved and here's their certificate. And it's just an auto-generated certificate from a pre-approval website. So you have to be careful, like, are the clients really pre-approved? Has their credit been checked? Has their employment been verified? Those are the most important things. And I'm always asking the buyers that we're working with, please introduce me to your real estate agent. Because you know as well as I do, when the realtor and the mortgage professional are working together, that communication lines are open, and the idea of putting together a financing condition, an offer without a financing condition, becomes higher, because the realtor can do a comparative market analysis. We marry it with the purview report that we generate at our office, and we have a really clear picture of what the financing is going to look like, so that when your clients put together that offer, the financing goes through even if there are no financing conditions. The other thing is that we always have to have a backup plan, and we would normally have a backup plan. I also wanted to give you an idea of where we are with low appraised values. We are seeing fewer and fewer situations where appraisals are coming in low. Okay, because sort of about a year ago, we had a real issue with appraisals coming in significantly lower than the purchase price. So I think things have caught up a little bit, but if you are working with people who have less than 20% down, we have to be a bit more careful, because they don't have the flexibility of making up the difference in case there is a shortfall between the purchase price and the appraised value. Then the final thing before we open it up to discussion is even those clients that you have that are selling a house, they still may have trouble getting financing. And I think, Barb, I had mentioned to you, I got a call not too long ago about somebody who was moving from Toronto and buying in Guelph, and said, wait a second, I thought I didn't need a mortgage, and now I've got to deal with bridge financing. The other thing that I'm finding too is sometimes in rural areas, because we are getting people that are moving from a rural area to like a more urban area, things move a lot slower in rural areas. So I have encountered a few instances where people put firm offers without a financing condition or a sale of home condition, and said, yeah, no problem, my house is going to sell. Right? And you know as well as I do, bridge financing is not a problem if there's a firm offer on the purchase and sale. But if your buyer hasn't sold their house, and let's just say they're coming from a different province, or they're coming from a rural area, there's going to be issues. So we were actually able to save a couple of files for realtors where we arranged private bridge financing. So being, like, one of the things that you can rest assured with is when we talk to your clients, we're going to go through this. We're not going to scare them. Don't worry about that, because we would like the transaction to move forward just as much as you guys would, right? However, what we do is we review the risks, and so they understand, and then we develop a plan B. So it becomes a really empowering conversation that we have for the clients. So that's kind of my more formal type of presentation. And I don't know, Barb, where do we take it from here?
Yeah, so I thought, you know what, let's open up the floor to questions. I mean, there might be something that you had explained. You did a fabulous job of explaining it, but there might be some further questions in terms of scenarios, that maybe some deals that they have currently sitting on their desk that they want to talk about. So does anybody have any questions? Don't be afraid. Or is there anything that Sandra said that resonated with you, that you thought, yeah, that exact situation happened to me, and how did you deal with it? Wow.
Barb, we have a shy audience here.
We either have a shy audience or everybody's really knowledgeable.
I don't know, maybe can I pick on somebody?
Sure.
I don't know. Maybe I'll pick on you, Celia. You've always been a really excellent supporter of the business. We've worked through a couple of files where we couldn't have financing conditions.
I always try to use you for my clients and because I always feel safe, and I know you do your job and you'll get it for them one way or the other. I just had a listing and, you know, I had offers. There were no conditions completely. And no agents applied anything on their clients, you know, if they were qualified. The only thing is, I called a few of them to ask what the status was on financing, but it was strictly verbal. I had nothing. And that's the risk we also take when we accept, you know, good offers, and we don't know.
Yeah, that's a very challenging situation if when you're selling a house and you're accepting offers without conditions, obviously, because your seller won't accept an offer that has a financing condition. So how do you as a realtor kind of flesh that out? You know, that's a very excellent question. I can tell you that there's a couple of realtors who often call me and say, hey, listen, I've got, you know, 6 offers on the table. None of them have financing conditions, and a lot of them are way over the asking price, right? Which is typical, right? What are some of the watch outs? So sometimes what I'll do is I'll pull a purview report for the real estate agent just to kind of give them an idea of like, okay, well, this is, you know, what purview is showing, right? So maybe go back to the sellers, back to the buyer, and ask them how much money are they putting as a down payment, right? That's always, because I think, you know, like I can get your pet dog a mortgage if you've got
Yeah.
25 or 30% down, right? But the situation is a lot different if the clients only have 20% down.
Mhm.
You know, so at 50% loan to value, when the clients are putting a significant down payment, the likelihood of financing not going through is very low, right? However, I have actually encountered a few situations, like you were saying, Cecilia, where you're a seller's agent, you're selling a house, and the clients had a significant down payment,
Mhm.
but they hadn't completed their income taxes and they were self-employed, right? And now we're moving from like institutional financing to private financing. So you're not getting 3% on a mortgage, you're getting 8% maybe, just for a short period of time until until they get their until the buyer gets their taxes straightened out. But you know, it's a risk for you as a seller's agent. If I'm talking to the buyer, I always say you need to close because you've got a legal contract. You know, it's a shame that this wasn't talked about before. The interest rate is going to be 8%, right? We might only need to do it for a month or two until you get your taxes done. So, but back to answering your question, yeah, it is definitely a risk, especially if you have a lot of out of town agents that are coming with offers that are high offers, right? So to answer your question, I would, you know, by all means, you can contact us. We'll do a quick purview report on the property just to kind of give you an idea. And then I think the following question would be, are they selling anything, right? And then the next question would be, you know, how much do they have for a down payment?
Yeah, that's what I checked out with the agent, and she assured me that their financing status was very good.
Yeah, so you have to trust that, I guess, because
I
as realtors,
guess, yeah.
yeah.
Well, it's an in-town agent, so I trust an
Yeah, but
in-town agent.
yeah, it's tricky because what you know, there's a level of sort of when you know the real estate agents within your community, there's a level of trust, right? However, when you're getting lots of offers from out of town, it's a whole different ballpark. And as a seller's agent, you want to make sure that you're protecting your seller, your vendor. That's your main fiduciary responsibility.
You got to know if that agent knows those buyers, or they just call her on the listing.
That's actually, Cecilia, that's an excellent, another question is, do you know Are you familiar with the sellers? Yes, I've worked with them for
Buyers.
years. They're great. You know, we've never had a problem in the past. Or, you know, they just called on the listing. I don't know
Mhm.
anything. That would be definitely a red flag. That's
Scary.
actually Richard, can
Any
I
other
pick on?
questions? Yeah, I was just gonna
Yeah.
say, for those that are not on camera and you don't want to kind of unmute yourself to ask, feel free to type your questions in the chat portion as well. And you can pick on anyone else you want, Sandra.
I will pick on Richard because Richard's a newbie. How are you? Yeah, tell me. You're just getting your. So Celia's been in the business for like 20 years, and Richard, you're just getting your feet under you and getting your feet wet. Yeah, but tell me a little bit more about what you're thinking or seeing.
Well, what Cecilia was just talking about, I've seen a few now, and Irene, that I work with, she actually asks for pre-approval letters when she lists a house now. So you can't come with an offer without it, and at least, or some kind of proof of financials, so that at least it helps with that comfort level. But it's been a good idea that way.
Yeah, because a lot of those that is an excellent, and I think we kind of got out of before we were, because I've been in this business for probably as long as Cecilia has been, and I mean we used to ask, a lot of realtors would always ask for pre-approval letters because we were issuing pre-approval certificates, and we still do issue pre-approval certificates. But I think you kind of get into the hype. You see like 10 offers, and you're like, okay, well, hopefully if they're putting together an offer, they got to get the financing. But making it a regular habit to ask for that pre-approval certificate. And what's really cool on the pre-approval certificate, I'll give you a sort of a tip to look at. You can see the total pre-approval amount, and you can also see the down payment, how much money they'll be putting as a down payment. So let's just say if they've purchased a house for $1 million and the clients have been pre-approved for 1.5 million, and they have like 700,000 to put down, you know, you're probably okay, right? But if the clients are buying for 1 million and they've been pre-approved for $1 million, and they have maybe 100,000 as a down payment, that could be a red flag for financing. So purchasing for $1 million, pre-approved for $1 million with only 100 grand as a down payment. That's actually not even possible because for those of you who may not know, any purchases over $1 million, so you can buy for 999,000, but as soon as it hits the $1 million mark, regulatory framework does not allow for insured mortgages. So the clients have to have a minimum of 20% down for any purchases over $1 million. Okay, because there's no insurance on purchase. It's the purchase price. It's not the mortgage amount. Just want to be a little technical there, but yeah. So good job, Richard. Thank you.
I have a client that, so she's selling a condo in Toronto, probably by the end of February, but not 100% on a date yet. Was thinking about putting an offer on a place yesterday, but then stopped herself because she has her condo coming up. So she needs the funds from that. So would the closing date have to be when she's sold the place firm, or is it when it's closed, like after, let's say it doesn't close till March 30th, say, you know?
Yeah. So let's just say if she does end up putting an offer on a house here in Guelph, and the closing date is like February 28th, she needs to have a firm offer on her sale, I would say at least 3 weeks before the closing on her purchase. And it's okay if the closing dates don't match up. You know, if there's a firm offer on the purchase and a firm offer on the sale, bridge financing can happen up to 4 weeks. 6 weeks is an exception. So to answer your question, she could close at the end of March easily in this scenario, only if she has a firm offer. So
Right.
Richard, the interesting thing about that would be I would probably contact the real estate agent that she's working with in Toronto and just saying, hey, listen, we're going to put together an offer. We've got a closing date of February the 28th. You know, what's the likelihood of her getting her property sold in the next week or two? And what do you think it's going to go for? Right? So that's how I would handle that conversation, because she shouldn't feel worried if she thinks that her real estate agent in Toronto can sell that property lickety split. But if the real estate agent in Toronto says, oh my gosh, this person thinks that her condo is worth 800 grand, but I think it's only worth 600 grand, then you know that that property is going to languish on the market, right?
Yeah.
Because the real estate agent is saying like maximum price on that condo would be 600. And the buyer thinks that the condo is worth 800 grand. So they're going to list it and it's going to sit there. And, you know, she might end up getting an offer for 650 in 3 months. Maybe
Right.
not in this market, but something like that. Yeah.
Okay. Thank you.
Sandra, I have a question for you. Thank you for hosting this meeting. I have on the topic of bridge financing, I have a client who has a house and they're looking to downsize. So they're looking to be mortgage free. And if we have a timing difference between the closing dates, even though they're kind of going the other direction, they are going to be mortgage free, but they may need that period of time for bridge. That should be no problem. Am I correct in saying that?
Whenever you say should be no problem, there would be a problem.
Yeah.
It's wonderful. Thank you for that question. That is like definitely a situation, and it's troubling, especially if these folks are older and haven't done anything related to financing. It can be a very tricky situation, because the only way to make that work, ish, is that the purchase, both the purchase and the sale have to close on the same date. And that can be very stressful.
Oh, really?
Right. Yeah. Yeah.
So,
Because,
so bridge financing in that circumstance, then you're saying doesn't exist?
now I don't know, were they, just to kind of, let's unpack this a little bit, Ish, were they thinking about, because sometimes I have elderly clients where they want to downsize, so they're going to put an offer on a condo, let's just say, move all of their stuff. You're going to go in there and fluff up their current home and then put it on the market. Is that a situation?
Something similar. They're just moving to a detached versus a condo, like a smaller detached, and they have half an acre now, and they do want more land, but a smaller house. And so they're afraid of being homeless. So we were talking about purchasing first and then selling second. And yes, in this market, I expect the home to sell, but you know, you want to carefully think out your worst case scenario nevertheless. And if our worst case scenario exists and we can't get our closing dates to align, I just want to know what the shortfall of that would be.
Yeah, so make sure that they work out the bridge financing, because let's just say, I don't know, what do you think their house is going to sell for?
So say sell, just round numbers, 800, purchased for 650.
So they're going to be buying for 800,000?
Sell for 800.
Oh, and then purchasing for 660. So I think what you want to do is, because sometimes bridge financing can actually be quite expensive if you're bridging the entire amount. I did get a call from somebody going, thankfully it wasn't one of our clients, because we would have sorted that out. They're like, how come my bridge financing is costing me $20,000? And
Oh,
I
wow.
said, because you've got it, and they were only bridging for a month, but they were bridging $1 million property, right?
Okay.
So, so sometimes the bridge financing can be expensive. You'd probably, I'm happy to chat with them just on the phone or online to kind of work through some of those details, but you'll want to make sure that they sort that out, just so that they're aware of the cost. Because, you know, if in fact it does cost $8,000 to bridge, and if they know that up front, they're less likely to have an issue than a week before closing going, holy cow, the bridge financing is $8,000. I didn't take that into account, right? That's an angry customer. Whereas if that piece is sorted out way in advance, and they're like, okay, I know the bridge loan is going to be $8,000. If I have to bridge it for a month, maybe we don't do it for a month. Maybe we do it for a week only.
Okay, very good.
So
Thank
there's
you.
lots. Yeah, thank you for that question. Excellent.
Great
I
question.
tell customers, Barb, I said I hate surprises more than they do.
Well, it's always best to like give them all the scenarios, right? Even if they're the worst case ones, it's better to be prepared than be surprised.
Yeah, and it's not a point like, because I just wanted to also remind the real estate agents in the part of the um, conversation, we're not scaring the customers, because we want to help facilitate the conversation. We're just making them aware of some of the situations that come up, and so that they're prepared if they do come up. Because these situations, you know, they do come up. They are rare, but I have a rule of thumb is if I don't tell a customer, it comes up, and then it looks bad on me. Now, I see Linda Tan raised her hand, and she's got a
Yeah.
question.
I have a question though. The bridge
Thank you, Linda.
financing, is it on the new, on the new home, or on the old, on the home that the sellers own right now?
Yeah, so that's an excellent question, Linda. So the bridge loan is the loan for the down payment.
For the down payment?
Yeah, so Ish, to answer your question, like if the buyers, the clients that you're working with, if they don't need a mortgage on their purchase, they're going to have to bridge a significant amount of money, like
Oh, okay.
650,000. But
Mhm.
but so for Linda, to answer your question, yeah, the bridge loan is the loan for the down payment, because
So
the
only the
clients
down
have
payment.
it's only the down payment, yes.
Mhm.
And that's why usually bridge loan is inexpensive, because people would be maybe putting 20, 30, or even 50% down, right?
Mhm.
And then there is a cost. Typically, there's a $500 cost to register the bridge loan against the property. So it's secured as a lien, just temporarily. But bridge loans can be fairly inexpensive. What we end up doing is we end up calculating a per diem rate for the client. So they know, okay, it's going to cost me $150 a day to bridge it. And if I bridge it for 2 weeks, it's going to cost me $2,000. And they're like, okay, yeah, no problem.
Okay.
That's
So-
something that I just learned today too. Sorry, Linda, didn't want to cut you off.
So that means if the seller are both are retired, then it's gonna be more costly than those they're not retired, right?
Well, if they're downsizing, it could be fairly costly, because if they're not expecting, like, let's just say they're selling their house for $1 million and they're buying for 500,000,
Mhm.
and they're not going to end up with a mortgage, the bridge loan could be fairly expensive because they have to do the full 500,000.
Okay.
Sorry if I'm not
Okay.
understanding this, but why in that situation would they have to do the full 500,000 versus the down payment?
I think Ish, I may have misunderstood you. I thought that you said that they weren't going to end up with a mortgage when they were downsizing.
Correct. So they're going
Yeah.
to, when they downsize, they're going to use the equity in the house to pay
Right.
off their current mortgage.
Yeah, but the bridge loan is on the house that they're purchasing because they don't have the funds yet because their sale is happening it could happen a week or 2 weeks after. But Ish, if you'd like, I can kind of run the for those of you who'd love to kind of unpack some of these, and I'd love to chat with you about any client scenarios. If you go to my website at skipthebank.ca, there's a link that you can click, and you can actually schedule an appointment with me. And Ish, I'd be happy to kind of run through the calculations for you on something like that.
Yeah, that might be good. I'll
yeah.
do that. Thank you.
Yeah, so just go to skipthebank.ca, click on the book an appointment, and you can book an online or telephone appointment. And I'm happy if any of you other people who are participating today have any questions, please feel free. I'm here to act as a good resource for you to help your clients.
Okay.
Thanks, Sandra. Well,
Thanks,
for the sake of time, because I think we're a little over our 30 minutes, any additional questions, as Sandra mentioned, just, connect with her via email or via phone, whatever is the best method for you. But I want to say thank you. I even learned something about the bridge financing today that I didn't know about. So thank you so much for sharing your tips and your knowledge, Sandra.
Thank you, Barb, for hosting. And for those of you who really, thank you, everyone. And for those of you who appreciated this conversation, if you if you just Google the Mortgage Center Guelph, I'd love it if you could provide some feedback through a Google review. That would be great. So just Google the Mortgage Center Guelph and do a review.
All right.
Thank you. You guys have a great day. Thanks, Barb, for co-hosting, and thanks, Celia,
No problem.
Richard, and Ish, and Linda for your participation. That's awesome. Thank you. Thank you. Thank you. Have a good
Thank
day.
you.
Bye, guys.
Bye.
Nice to meet you all.
Bye.